Alright, it's 8:05 a.m. Central Time on Wednesday, November 8th. Let's jump right into our pre-market trade planning exercise. Now, in the overnight session, the market has held up relatively well, with buyers active in the upper part of yesterday's range. And now heading into the open, our short-term bias will continue to be neutral bullish. And if the market is going to head higher, then we want to see buyers holding ES above the 43.80 to 90 initial support. Holding above that area can leave the door open for an upside move, while a breakdown below 43.80 to 90 would be an intraday bearish indication, and it could mark the beginning of a shift in the short-term control from buyers back to sellers. And even though the market has been quite strong, we do have some better resistance areas above, especially in the Nasdaq, and if NQ is testing the 15,449 to 469 area, as the S&P is testing one of its own notable resistance areas above, like 44.29 to 35 or even 44.13 quarter to 23 quarter, then we could see sellers step in to both of those markets. And as far as taking a long setup at these higher prices, we will need to see clear signs of initiative buying in order to justify taking a long at or above 4,400. Now, that's a possibility as long as we're seeing continued broad market strength, sustained upside momentum, and the Nasdaq also breaking higher. And even in that situation, I think we should be more conservative with our upside targets. So first, let's set up the long at initial support. And on the upside, we are going to target a move into 44.13 quarter to 23 quarter. And I think these targets look okay. So an entry at 43.87 would give us 3R into the initial resistance zone at 44.13 quarter to 23 quarter. So as long as we're not seeing clear signs of broad market weakness and sustained downside momentum, there could be potential for a long setup at initial support. Now, it's not an automatic long because of the fact that the markets are quite overextended and there is potential for sellers to step in. So I think it's a good idea to prepare for a long setup at initial support and then assess the real-time situation and determine whether it's worthwhile to take that long setup. On the upside, we have pre-market resistance at 43.9975 to 44.0675. Again, it's not an automatic short, but if in real time we are noticing a lack of upside momentum, or if we see a failed breakout attempt above yesterday's high, then it could turn into a possible short setup. So again, this is a preparation exercise. I'm not necessarily taking every single trade that we're currently setting up. But if in real time we see a rejection, a false breakout, or a major bearish disconnect on the advanced decline, or the Nasdaq putting in a sharp downside move, then we could get a short at even the pre-market resistance zone. But the more notable areas of resistance are higher, beginning at 44.13 quarter to 23 quarter, and then the higher the market pushes, the better the resistance it will run into. I think it makes sense to at least be prepared to short the 44.13 quarter to 23 quarter area, and it would be a much better short if at the same time NQ is testing 15,449 to 469. So given that the buy side is more dominant and in control, we have to be a bit more precise and careful on the short side, and I think it's going to be better to time the trade based on Nasdaq hitting its own respective resistance at 15,449 to 469. So in that situation, I think initial resistance could be a good shorting opportunity, and on the downside, the high probability target can be just a little bit ahead of the 4400 high volume node, and then the final target can be near the overnight low area or back down essentially into initial support. And based on that, an 18 quarter entry would give us 3R. Let's set up a short at 44.29 to 35 as well. And again, we are going to use a very similar target around 44.01.5. And in this case, the final target can be the 43.94 overnight VPOC, simply because the more overextended the market gets to the upside, the more conservative I want to be with my targets on the downside. So we can see that a 28 entry would give us 3R potential. And in order for these targets to get hit, we would essentially need to fail at one of these upper zones. Now, getting a reaction at the upper zones is relatively high odds, but getting a failure is going to depend on, I think, how NQ behaves at 15,449 to 469. But these upper areas are definitely safer spots to take a short. I'm also going to make a copy of the initial resistance zone, and in this case, I'm going to put my stop behind 28. So this is what we would call a daisy chain sequence on the short side, where the first short is at 21.5, the stop is one tick behind the next shorting opportunity. So this would be a more conservative entry and a safer approach at initial resistance. So if there are some warning signs in real time, but it still makes sense to take the trade, then 21.5 with a stop at 28.25 would be a more conservative approach. And then if the market continues to run on below average volume, then I think the 44.3775 to 47.75 could end up capping the upside. So that is a potential short as well. And in this case, we are going to use more conservative downside targets of 44.23 and 06.75. So I think that really covers it on the short side. As far as long setups go, I think if we take out 43.80 to 90, then ES will likely test the 58.25 to 67.75 area, possibly even 50 to 53. And we are going to have to be cautious on taking longs at these lower areas, simply because if the market is putting in a strong rejection or failure at pre-market resistance, and we're now breaking down below 43.80, then there could be potential for long liquidation. So I'm going to set up longs at 58.25 to 67.75 and 50 to 53, but I think we need to be quite careful with our upside targets. And in this case, I'm going to set the final target to be 43.80, and the high probability target can simply be 72.25. So that's going to be quite a conservative approach here, but I think if the market is selling off on broad market weakness and sustained downside momentum, then it makes sense to be more conservative on the long side. So the safer play here is going to be closer to 54.5, would stop at 49. But if the market is exhausted into the 58.25 to 67.75 zone, then this entry could work as well. I'm not interested in buying the low from Tuesday. The RTH low at 72.25 I think is a weak low, and it's not going to take a lot of effort to take that area out. So these are potential longs, but again, I think they will require a intraday market assessment. And the safer long is going to be lower at 22.75 to 32.75 and 34.75 to 39. So these are long setups that you can take purely based on good trade location. So for example, 28.25 would stop at 21.75. I think that's probably going to provide decent edge first time down, simply because of good trade location and the fact that the market would be exhausting the range potential by the time it reaches that area of support. And on the upside, I think the targets should be a bit more conservative here, so I am going to set the high probability to 50 and the final to 58 in this case. So our entry potential is going to be at 37.75 and 28.25. So I think these are much safer long setups that can be taken, again, purely based on the strength of the zone and the fact that the market would be very exhausted by the time it reached that zone. So these are the potential zone fades that we are working with today. And then in the event that there's big upside momentum or big downside momentum and it makes sense to take a pullback continuation, that is something that will need to be set up in real time. I think one other thing that we can do is make a copy of pre-market resistance and set it up as a long. So if we get a breakout above the zone and then a pullback to it, as long as the market is breaking out on sustained upside momentum, there could be potential to buy that pullback. And I guess we can pre-plan that as well. And on the upside, the high probability in this case, I think it makes sense to just make it kind of middle of the zone, a little bit ahead of the potential short entry that we had here. and then I think the final target can be 29. So that tells me that 44.0375 could work as a potential entry on a pullback following a breakout above that zone. Let's do the same thing for the 43.80 to 90. Make a copy of it and then set it up as a potential short. And on the downside, I think the high probability target can be 67.75 and the final target can be 58.75, and this is still relatively conservative. So in the event that we get a breakdown below 43.80 to 90 and then we pop back into that zone, 85.5 could be a good entry, targeting a move down into the lower zones. So again, that's something that will need to be determined in real time, but we can still plan for it in advance. So that is going to be it for today. If you found this trade planning exercise to be helpful, then please do share this video with other traders, help spread the word. And aside from that, good trading today, and I will catch you in the next one.